presented by National Stock Exchange.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shell Bhatnagar, and this is Market Today presented to you by National Stock Exchange. The last half an hour of trade is what we will be decoding for you. The markets have slowly and gradually climbed out of yesterday's knee-jerk reaction on the union budget, now up to 50 points as far as the Nifty is concerned. On this special edition, we're going to be also welcoming two of the biggest voices in the D Street that we have, Mr. Nilesh Shah, the MD and CEO of Kotak AMC, and Mr. Nilesh Shah, MD and CEO of Envision Capital as well, to decode for you what exactly should you be doing post the budget announcements, how do you read the fine print, and where are the opportunities presenting themselves for retail investors at large. Shell, finally, 25,000 is back?
Well, Sakshi, yes, a very warm welcome to all our viewers on Business Today Television. I think what the market has done is that post the knee-jerk and a very angry reaction that it showed because of the rise in STT for futures and options, sane sense and practicality has prevailed. People get used to higher taxes. Sakshi, I'm sure you remember, but you haven't experienced. There was a time when there was zero tax on long-term and short-term capital gains. They did not exist in the market. There was no tax on software services, and those were times when Infosys used to grow by 100% each year. Be that as it may, we have accepted that, worked overnight, found out stocks and sectors that will perform well over the next 11-12 months or so, and life continues.
Absolutely. Right now, if you see viewers, barring IT, private banks and pharma, slight losses there, rest of the pocket is all looking good. Infra is up by 2%, autos are up by 2%, you have oil and gas, metals up by 1% each. You also have the real estate climbing up and the broader markets showing you some gains. On the Nifty, you have power grid up by 7.3%, Tata Motors, Adani Ports, Reliance Industries 3.2% higher. Big heavyweight companies definitely supporting the move, and the metal index is also back after 3 days of a move on the downside. But let's welcome both our special guests, Mr. Nilesh Shah and Mr. Nilesh Shah, with us on this special. Has it ever happened? Good afternoon to you, both of you. And has it ever happened that both of you are together on a show and everybody gets confused who is the anchor speaking to, and do you speak out of turn then? Because your name is exactly the same.
So एक बात एकदम सही है, कोई भी इंग्लिश रिप्लाई करे फर्क नहीं पड़ता, हम दोनों एक जैसा ही बोलते हैं.
हाँ, ये बात भी है. Okay, so I think that's the most important learning, that both mirror each other. Gentlemen, very warm welcome. Sakshi and I have discussed for the last 2 hours how to sort this problem, because Nilesh sir wearing the jacket, Nehru jacket, is senior. So we will refer to him as Nilesh sir during the show, and Nilesh ji to the gentleman from Envision. Is that okay?
Shell, you can refer me as Nilesh. That's fine. No Nilesh, that's fine.
ठीक है, चलिए सवालों और जवाबों का सिलसिला शुरू करते हैं. Sakshi, first to you, and we'll start with the senior sir. So,
Nilesh sir, first up, your verdict of the budget. कैसा लगा आपको ये? And you always use the cricket parlance. There's a lot of halchal happening in the cricket parlance right now. What will you say in, when you have to describe the budget?
It's a test match budget. It's not T20 budget. It's a budget for future. There may be disappointment to people for variety of things in the budget, like traders will be disappointed by STT hike. Investors will be disappointed by change in taxation for sovereign gold bonds. There may be disappointment for debt market players because cross market borrowing program is ahead of expectation. But at the end of the day, this is the budget where for the first time our capital spending at 12.1 lakh crore is more than the net market borrowing of 11.7 lakh crore. We will be able to face our kids and tell them that we haven't mortgaged their future for our present. जितना कर्जा उठा रहे हैं उतनी ही एसेट आपके लिए छोड़ के जा रहे हैं.
Okay, on that opening remark, let's just dig deeper. Nilesh ji, I am coming to you. 7 sectors and 7 broad industries have been highlighted by Finance Minister Nirmala Sitharaman, among them biologics, biopharma, semiconductors, rare earth metals. Where is the Envision research team worked overnight or maybe over the next 1 week or so to find out potential outperformers? What do you think is the key gain in this budget?
So, Shell, I clearly from all these sectors, I think most of them are very futuristic sectors. So, clearly the focus of the budget is about the future. And as Nilesh said, this is essentially a test match ka budget. So, clearly from a very listed space, publicly listed companies, there is not yet enough a kind of a choice to kind of really fall back upon in terms of rare earth or critical minerals and those kind of things. But the sector which clearly stands out is the infrastructure space. The fact that, and if you actually add the outlay, which is the 12 lakh crore plus the grants, the overall hike on infrastructure is probably in the high teens or maybe bordering around 20%. This is pretty much unprecedented. So clearly at Envision and the research team, the focus is going to be a quite lot on the whole infra space and the capital goods space. Mind you that space also has corrected quite meaningfully because of the kind of slowdown that we saw in a bit of the spend in the earlier quarters and some of the concerns around rise in metal prices, and also maybe fears of allowing Chinese companies or making it easier for them to come into India and bid for some of these infrastructure projects. These all have been concerns. Some of them have essentially got allayed, but clearly from our perspective, this budget, I think if there's one standout space, I clearly believe it's the infrastructure space, number one. Number two, regarding infrastructure, there is basically the finance minister has proposed the setting up of a credit guarantee fund for infrastructure, which is 25,000 crores. That's a very, very large amount. And I think it basically will solve a very important problem of essentially banks or earlier lenders who were very hesitant to lend. I clearly believe that this credit guarantee fund will encourage them, induce them, and push them ahead to go and lend for infrastructure projects. On one hand, the government has upped the spending, the allocation has increased. Second is that the credit guarantee fund basically will encourage lenders to go ahead and lend. And thirdly, is there's been a meaningful correction in the stock prices of some of these cap good companies. So that space looks clearly to be the most interesting space as a fallout of the budget.
Right. Nilesh sir, the big ask or perhaps a hope before the budget was that this budget comes at a time when FIIs have pulled out 3.5 lakh crores over the last year or so, 13 months or so from the markets to bring them back somehow. Will the FIIs come back despite the hike in STT?
So Sakshi ji, FII is not one harmonized entity. There are hedge funds, there are long only funds, there are sovereign funds, there are active funds, there are passive funds. If we break this, active FPIs have been buyer in primary market. आज तक पिछले 13 महीनों में एक ऐसा NFO नहीं आया जहां पे हमने अप्लाई किया हो और FPI हमारी कंपटीशन में नहीं खड़ा हो. पिछले साल उन्होंने 75,000 करोड़ रुपए प्राइमरी मार्केट में मोटा मोटा निवेश किया होगा. आई थिंक ये ट्रेंड चालू रहेगा. दूसरा पैसिव है. Whenever emerging markets have done well, money have come into emerging markets subsequently. Last year, after a gap of almost more than a decade, emerging markets outperformed developed market, US market. we believe this year passive flows will be buying rather than on selling. तो ये दो जगह पे हमें पॉजिटिविटी दिख रही है. तीसरा HFT है. No one knows how much money they take out. जो ग्लोबल मीडिया है वो ऐसे बताते हैं जैसे HFT पैसा लेके आ रहे हैं, but they make 30, 40, 50, 60% return on that and take those money back. वो कोई नहीं बताता. With increase in STT, with higher scrutiny from SEBI, with orders like against Jane Street, I believe HFT will start taking lesser money out of India. तो वहां पे भी कटौती होगी. Then there is FPI, FDI जो अपना इश्यू करके पैसा लेके जा रहे हैं. Hyundai हुआ, LG हुआ, Prudential हुआ, ये लोग सब यहाँ पे माल बेच के पैसा बाहर लेके जा रहे हैं. That is likely to continue because our market gives them exit, gives them valuation. And then there is active FPI who keep on selling in secondary market जैसा आपने बताया. That selling should come down little bit over a period of time as they have become underweight India. So if you say FPI in totality, my submission will be their selling intensity will start coming down as the year progresses.
Okay. Nilesh ji, coming to you, mean reversion is one of the financial bedrocks of making money in the super long term. How do you see this very sharp reversal that we have seen in silver and gold prices? You are an active fund manager on the PMS side. How are you looking at the metal space at this point of time? Is the best part of the rally behind us?
Well, for now, it looks like that the best part of the rally is behind us. And that is not because of the kind of appreciation. Yes, of course, there has been a massive appreciation which has already happened out there. But usually when it becomes talk of the town, every second person has a FOMO kind of an effect of how not having participated. When you start kind of dishing out narratives in terms of why silver, gold, other metals are basically going to be headed higher, is when you know that these are signs of at least a kind of a near-term top. And honestly, it's always very hard to kind of really say whether the rally will continue from here or not, but at least all the symptoms that you would basically see of a very overheated market, all these symptoms were very evident, especially since the start of this calendar year. And that's really when you've seen a very, very parabolic move. Maybe the only, I would say, within all these metals, probably the only place which looks relatively better is basically gold, because there is the whole move towards de-dollarization, where central banks want to diversify their reserves, and therefore are looking out for gold as one of the options to basically own and to diversify away from the dollar. That is the only area, but otherwise everything else is just purely a narrative. And it looks that for now, at least, basically the rally in metals in general is kind of done with, and maybe it will go through some more correction. There could be more consolidation, and then let's see how things unfold.
Okay. Nilesh sir, one question to you as well. One of the most stunning achievements of previous 5 budgets is the fiscal discipline that the government has followed, and it continues the same path in this document as well. How do you see the GDP to the fiscal deficit forecast at about 4.3%, and how do you see Indian bond yields, the 10-year bond, over the next 12 months or so?
So the 10-year bond yield have gone up today in reaction to the budget, as the gross market borrowing program at 17.2 lakh crore came well ahead of market expectation. We believe Indian interest rates are likely to remain range bound. On the floor, they won't go below a certain level, let's say 660, 655, because there is so much of large borrowing program. The net borrowing program of Government of India is close to 12 lakh crore rounded off. State development loan will be another 8 to 9 lakh crore. put together, you need 21 lakh crore borrowing for the government securities. On the other hand, they are unlikely to cross 7% because at higher level RBI will intervene, open market operation, market intervention, liquidity provision, and so on and so forth. So to some extent, I will say Indian 10-year yield will be range bound and reacting to the announcements by the government as well as the RBI.
Nilesh ji, I'll come to you and I want to ask you, has this budget done particularly anything that could revive private capex that has so far been unable to match to the heavy lifting that government capex has been able to do? And secondly, will this in any way improve the corporate earnings as well?
One of the, we have to recognize the fact that it's basically the government which remains the anchor investor or the Pied Piper, so to say, and clearly they has continued to do the heavy lifting, and that's got manifested in terms of the increased allocations to infrastructure. I think when we look at private capex, we're looking at basically from a more conventional prism, saying it's only companies which invest into chemicals and petrochemicals and all of that, which is considered to be private capex. But clearly, I think today private capex is not just confined to some of the conventional sectors, it's also confined to some of the new age sectors. Some of them, even there's foreign participation is also very high. So look at areas like semiconductors, for example. There's a lot of investment happening out there. The other day, a very leading steel company, I think JSW Steel, announced a 2 lakh crore capex over the next 5 years. That's quite meaningful. That's something which we haven't heard in a very, very long time. Similarly, the capex on defense is kind of inching up or is moving up quite higher, and there we are clearly seeing a very strong partnership happening between the government and the private sector. So I clearly believe that it's an all-out effort. It's a more comprehensive, it's a 360-degree strategy of higher allocations, of Atmanirbharta, indigenization, import substitution, all of these factors which are basically contributing into it. Yes, there can be some lead and lag. At some point of time, it's the government or the PSUs which do more capex. At times, it's the private players who probably lag around but catch up a bit. But I think on the whole, overall, as a system, we are seeing increased investments in capacities. Yes, the nature of that capacity can be different from what it used to be 5 years ago or 3 years ago, but that's the nature of an evolving economy. We are a growing economy, an emerging economy, and an evolving economy, and therefore the contours of that capex will keep changing and getting redefined with every passing year or so.
Right. Nilesh, coming back to you, what do you think of the rupee at this point of time? There is a lot of talk in the market that the real effective exchange rate should be somewhere between 94.5 to 95 for it to be attractive for foreign institutional investors to at least pause net sales, if not begin buying, because earnings growth apart from autos and banks doesn't seem to be coming to that high teen level. Will the rupee continue to fall?
So it depends upon your time horizon. If you are taking 3-year, 5-year, 7-year view, I think rupee will continue to fall. The reason why rupee has to fall, because our productivity as well as our inflation is adverse to our trade partners. China can build a hospital in Wuhan in 7 days. We won't be even able to name a hospital in 7 days. Our inflation has come down a lot, but it is still higher than our trade partners. On top of it, we Indians believe, be Indian, buy Chinese. We run $100 billion trade deficit with China. Put all these things together, destiny of rupee is to depreciate. It will depreciate between 2 to 4% a year to maintain competitiveness. We think let market decide what is the level of rupee. if someone intervenes to fix level of rupee, it holds temporarily, and then there is a far bigger price to pay. So my recommendation, let market forces determine what is appropriate level for rupee.
How do you view the resilience of the Indian economy in the current global economic environment? Do you think the budget has been able to, shield some of the impact that we had been facing by way of tariffs, uncertainties, geopolitical risks that we've been facing, supply chain issues? Has the budget been able to do any of that?
I'm not quite sure if the budget is the right platform to do it. I think over the last 1 year or so, so much has been achieved outside of the budget or even before the budget. I believe the government has been extremely responsive to the headwinds and to the challenges which essentially the global economy has posed for our economy. And I clearly believe that the government has been kind of dealing with each one of those challenges with the utmost seriousness. And that is getting kind of exemplified and demonstrated. The most recent signing of the finalizing the trade agreement with the European Union, the continuous engagements that we are hearing on relating to the trade agreement with the United States, with some of the other countries as well, our positioning now on customs, our willingness to kind of re-examine some of those trade related restrictions. I think all of that has been dealt with in a very, very measured manner. And I believe that over the next 1 year or so, and more particularly this calendar year, I guess a lot of these challenges we would have basically created or developed solutions or responses for them. And I probably think that maybe same time next year, a lot of these challenges will be behind us. It doesn't mean that we would not have fresh set of challenges, but that is really the nature of life. That's the nature of economy, and that's the nature of business, that we will continue to have challenges. We deal with these challenges and we get stronger and we move forward. I think clearly the big hallmark has been over the last many years is to bring about stability. We've earned it well. The economic survey has put that very well, that we've earned our stability. Now let's build our strength. And that's what essentially I think the budget has been an important integral part of that journey towards building that strength. And I'm quite sure many more things will happen. As they say, picture abhi baki hai.
Okay, let's continue with the vision of Envision, Nilesh ji. I was trying to understand about this defense outlay. A fairly decent increase given that in May we had Operation Sindoor and it continues as of now. And the fact that apart from one particular stock in the PSU space, everything else has corrected substantially in terms of prices. How do you see the defense space at this point of time? Anything that your research team is working on?
So the defense space, yes, I think the potential is huge. It's just that the valuation still for the entire pack in totality and in aggregate terms is clearly on the higher side when looked in context of the near-term earnings. So to that extent, I think one should still use, opportunities where there is some weakness in the stock prices of some of these companies to probably then step in and buy into them or add on to your existing positions. But I think on the whole, on an aggregate basis, the space definitely looks expensive. Yes, there are some interesting opportunities on the private side, but those are companies which are still very small, where you could actually it might take still probably a year or 2 years before the numbers start to manifest and show up. So I think one will require some bit of patience. And as they say, hold your horses before you finally go out all in to buy. So I think what the budget has done is to increase allocation to defense, indigenization, Atmanirbharta remains basically the underlying philosophy. I think these are the two things that we have to keep in mind. But in terms of looking at investing opportunities, I probably think valuations still are on the higher side. I think wait for more attractive levels to really kind of go all in out there.
Right. Nilesh sir, if I have to ask you, any multi-year themes that investors must track from now on post the budget, what would those themes be?
So multi-year theme is obviously driven by sectoral allocation. But most important thing within sector is entrepreneur. You have to bet on entrepreneurs who have some vision, who will execute that vision on ground, and whose governance will not take you for a ride. Since we can't be stock specific, we will talk about sectors. Let me just illustrate one sector, and then you can extrapolate it to other sectors. World over, we are seeing robots getting more and more prominence. Dark factories run by robots are coming. Humanoids are coming to help in household and do manual work. Now, robots will require hardware as well as software. There are people who believe someday we'll have more robots than human beings in the world. Now, any company which is engaged in robotics, be it on software, be it on hardware, will have a long runway of growth. Today there may be demand for 1,000 robots, tomorrow it will be 10,000, day after tomorrow 1 lakh, and day after that 1 million. There is exponential growth opportunity available. Now, are there companies which can go and capture those opportunities? There may be some software company trying to develop robotic software. There may be some component company trying to make components for robots. This is one sector which one can invest on a longer term basis.
Right. Nilesh sir, before we let both of you go, I have one observation to make. In the previous month, Kota KMC made a very large allocation to a public sector bank. Obviously, we can't take names and you won't even comment as well. But the trajectory of earnings in the PSU banking space, how are you looking at them?
So, Shell bhai, the margins of banks are coming down over last couple of quarters because repo rate has been cut, advance rates fall immediately, deposit rate takes times to adjust. We believe with this budget, it's almost certain that now there will be no more rate cuts. In market, one should never say never, but it looks like that probability of rate cut is very, very low. From here onwards, either interest rate will remain stable or start rising. That being the case, the NIMs of the banks will recover. Their deposit will get repriced, but advances will not be. So we believe banking sector profitability trajectory is on the way up, and we should see in FY27 1.5 times growth over FY26 in terms of profit growth for banking system.
On that very hopeful and forward-looking statement, let's call it a day, gentlemen. To both Nilesh's and to both Nilesh Shah's, thank you very much. It was such a wonderful interview. And from next time on, we will keep this combination on.
Looking forward.
Thank you so much.
Thank you.
All right, viewers, we'll wrap it up on that note, but do stay tuned on to Business Today Television as the continuous coverage on decoding fine print of the union budget continues on the other side as well. Stay tuned.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE. Presented by National Stock Exchange.
markets move today to what's setting the stage for